Welcome to episode 3 of Read With Me, where we'll be reading psychology books. And in our continuation of reading Trading Psychology for Dummies, we are in part 2 of the book now. And we will continue from the part 2. And in our last episode, we we learned two things in major, which is emotion as a signal. It signals something for us, is an information. So it's informing us about some things about us. So our feelings are and talking about and the last chapter, the chapter 2, talks about resilience, how we need not to be, you know, how we don't need to give up. We have to keep repeating the same thing so that at least it will master us. In episode 1, we study how evolution designed us and the way our brain is wired not to be good for trading stocks or forex. And like there's a way we can permutate our brain in a way that we're going to kind of be effective in trading and be successful. So that's what we are learning. So, and in our last episode, emotions and resilience. But today now we'll be going into part 2 of the book, which is making a successful trade. So making a successful trade. So without wasting time, let's go right into it. And in this part, we'll work with demo accounts, develop smooth trading processes and rigorous trading plans, recognize implicit and explicit patterns, improve your opportunity for profit while limiting your risk of loss. Manage position in an active and disciplined manner. So this read with me parts. So we're going to be working. Don't know. We are with I've gone beyond working with demo accounts, but is the writer stated this why was in the introduction to the book that I assume that the reader is what is it called? And the way the reader is a new trader, and the way for Dummies book is designed, you can just go to any line, any chapter, any something you want to read about and pick it, regardless of whether you read it from A to Z or you start from Z to A. So regardless, you're going to learn something from the book. So that's how the book is being designed, all for Dummies books. But this read with me, we are starting from the beginning to the end. We're just going to be reading it chapter by chapter. So in this chapter, which is chapter 3, we're going to be learning setting up a demo account, developing and testing your trading strategies, finding your personal trading style and your market niche. So there are some things that we're going to learn from this, improving your explicit and implicit pattern recognition skills. Okay, developing your personal strengths and accepting your weaknesses, designing frictionless processes and continuous developing them. Frictionless process. We learn about these processes too in our past episode. So chapter 3, developing your personal trading system. Developing your personal trading system. So does anyone really and truly enjoy doing dry runs? Hmm. Developing your personal trading, developing your personal trading system. You need a trading system also to trade profitably in the system, in the in the market. So now we want to learn about developing personal trading system. Now let's move forward. Does anyone really, the first paragraph of this chapter, does anyone really and truly enjoy doing dry runs? Most humans, if they are not honest with themselves, will take a pass on if they are honest with themselves, would take a pass on completing all the prep work and just jump right in. So we'll take a pass on completing all the prep work and just jump right in. Get their hands dirty and tackle a task head on, to be honest. Most humans would fail. And to be honest, most humans will fail miserably if they adopted this as their primary strategy. In this chapter, You will find out how important and useful it is to improve your trading skills by setting up a demo account and working through some trading scenarios. No one should be forced to learn how to swim by being straight into the deep end of the pool. Okay. So what I believe what he's trying to say from that statement is the fact that as a trader, you don't need to jump right into um trading with real money. You just have as comparison to swimming that you don't need to learn by being thrown into the deeper part of the pool. For you start gradually, which is a very good analogy. Even though personally, if I have to be sincere with you, I have never traded demo accounts. I would rather not trade than trade demo accounts. Yes, I'd rather not trade than trade demo accounts because of your emotions. It's better to lose the money. Even though I've tried with Saint accounts, I've traded Saint accounts. Like I always make sure all my trades, because if it goes well, I'm going to reap the benefits. And if I lose the money, yes, it's something I can afford to lose. Because my introduction to Forex, the way I was introduced to it was different because I initially gave someone money to trade from here. The person lost the money, so I already lose starting up. So starting out rather. So coming into the system, I take my time to learn everything, all the intricacies that I'm supposed to learn. And finding out trading with demo does not really incur any emotional attachment. So you can just easily go straight into the trading something and continue to kind of begin to feel yourself like your losses will mean nothing to you because you can easily add money to your demo account. But it's not as easy as real money. Because if you trade with real money, you're going to know how it feels and you'll be very, very cautious. Where you need to learn, where you need to learn, you will put your mind into it. And the one thing that discouraged me from trading with demo was the fact that when I started out, the person that introduced me to the forex trading that I gave money that lost the money for me then, was actually trading demo before he started trading real money. So the demo has already imprinted in his mind looking for a huge amount of money to trade with. And I could remember there were times that I would lose a lot of trades using demo accounts. And losing a lot of money using demo accounts does not really affect him. And you won't even talk about it. You won't even know that he lost any money. But when he win with demo money, everybody will know that he won something. Whereas he is already attached to winning with demo. But whereas he lost a lot with demo, but he doesn't pay attention to those ones because it's not real money. So he transferred that into with real money. When he lost money, it feels like nothing. He doesn't feel accountable for the money lost. But when he wins, he try to amplify it and try to source for more funds. But to me, I believe that's not some. So that's the reason why I did not try to trade with demo account at all. I just want what is it called? I want real experience. But, we are reading book here, and this person is giving us another perspective about it. That if you want to learn swimming, you are not supposed to be thrown to the deeper side of the pool, which is true. And for you to be able to learn appropriately in the trading world also, you can start with demo, which is very, very good. Very, very good. So start with demo, so that at least you'll be able to learn all the technicalities involved in trading, what is it called? In trading. Let's put it that way. Trading. So then with time, but don't get used to all those fake money. Plus emotions when you now get to real money, things will be different. So it's better to learn. But nonetheless, like I said, no one should be forced to learn Nobody is forcing you to learn anyway. And you should always be aware that risk is involved. So no one should be forced to learn how to swim by being thrown straight into the deep end of the pool. So that's that about that. You can also improve your trading strategies by testing and improving them with paper trading, which is good, which allows an investor to practice buying and selling without risking real life money. Back in the day, paper trading involved free paper on which you wrote down your simulated stock buys and sells. Nowadays, most paper trading take place on a computer where one simulates trading on the real stock markets. No matter which simulation strategy you use, it is sure to save you some painful, expensive lessons over time. Over time, you will find a trading style that matches your strengths and personality. You will also find the market and instruments that suits you best. With a lot of practice, you will learn the art of pattern identification, when it comes to markets, explicit patterns, charts, constellations, for example, are quite common. Although these tend to be easy to spot, there is also an intuitive form of pattern recognition, one that requires much more experience to discern and is also much more difficult to explain from an intellectual viewpoint. I guess I'm getting to that gradually. Remember, always ask yourself whether you are aligning your skills and talents to shine when you are trading. Continue to develop your strengths and accept your weaknesses and shortcomings. Nobody is perfect. Markets are constantly changing, sometimes quite dramatically. You have to be careful or you will miss the signs and get taken out. Routines and habits constitute an important psychological support in trading. You must have a fixed set of rules, but the rules must not interfere with your adaptability and willingness to change. You must be willing to change. That's very, very important. Very, very important. Very, very. Though if you adopt some type of thinking methodology in the market, to change will not be an issue for you because you would have been able to know how to adapt your strategy with different market conditions. So you must be able to adapt your trading strategies and setups to changing market conditions, just what I said. Process, orientation, and flexibility must go hand in hand. Working with demo accounts, another subtopic. Trading is quite a demanding and complex activity. Beginners sometimes underestimate the cognitive and emotional challenges they face. Theoretical knowledge alone is insufficient to survive on the stock exchange. Without practical experience, starting out as a trader can be an expensive proposition, this is because the market work differently from the way most people expect them to work. Okay, that's true. The demo account makes it easier for you to step into the world of trading while saving you a lot of money because you are trading in simulation mode and risking no money. You get a chance to try out your strategies and test everything in a sandbox environment, which is good, regardless of the result of the individual trades. Or if you make an error, you lose nothing. You just gain valuable insight, but you must not allow it to get to your emotions because when real money starts to be on the line, it's now on the line, you will begin to feel very, very different. You will find numerous suppliers on the market willing to provide you with simulated trading environment where you can practice your trading skills under real life market conditions. Most brokers are happy to provide you with free trading software. But of course, this act isn't completely selfless. You should get used to the platform with the aim of entering real life trading with your own capital. Keep this info in mind when selecting a broker. True. Warning, the barriers to entry are low. That's a serious one. The barriers to entry are low. There is no barrier as far as I'm concerned. You can open a trading account today, fund it today, start trading today. It's very, very low, bro. Which means you can open a trading account in no time. Yeah. That means your access to the market is also quickly established. I strongly recommend if you are an inexperienced trader that you rein in your greed, mm, and resist the temptation to immediately get started using your own money to trade. That's a very, very good point. He is recommending to an inexperienced trader that you should rein in your greed, that you rein in your greed and resist. You must resist the temptation to immediately get started using your own money to trade. I'm not a greedy person. I know you were brought up to be very, very contented with whatever we have. So when I start trading, all the money that I've been promised, and maybe because I've been doing business before, I know that not all that these cars are good. And things don't seem to work out the way it is being preached when it is being preached to you as if it's all good, like nothing bad can happen. Then my mind all switch to only look for those uh, portals that one can run into when trading, because you have been told the good side of it and you learn here and there. You see a lot of things, and most people don't put theirs. The way I even do my trade ideas and signal, I've never seen anybody do it that way. I give trades every day. My losing trades are there, my winning trades are there. When I lose consistently is there, when I win consistently it's also there. So I'm hiding nothing, and at the same time, I'm not running after anything. Uh, I'm not really running fast. My own ideology is I must slow, make haste slowly. That way, I fill all the gap. So I'm not greedy. So because I know, and I know to start with little money, even if it is not much, because an insignificant money that I know my daily expenses, and I know that using this type of money is as if I'm using this to buy this. So I don't feel much attached to any money that I use, even to date, because I don't take any risk. I don't even take bigger risk. If I lose my money, of which I lose money, but I'm not attached to it anyway, in the sense that I make sure they are insignificant and don't even affect me. Yeah, and like we learned yesterday, emotions. Talk about emotions. Emotions and an indication. The moment I start placing trade and I begin to feel somehow, feel anyhow about the trade, I know I'm risking too much. And if I don't take the trade seriously, I know I am not. My risk is won't get me anywhere. So I have to increase and decrease accordingly. So, but if you know you are an inexperienced trader and you rein in your greed, it is better you resist the temptation to immediately get started using your own money to trade. Let's continue. Without practice and planning, you will have beginner's luck at best. The worst case scenario involves your losing all your money in a short period. Do you remember my words of advice about not diving into the deep end of the pool if you don't know how to swim? Patiently develop your abilities in the shallow end of the pool. With your feet firmly on ground, test and train various techniques and styles. By starting out with a demo account, you can avoid a whole slew of painful experiences. Painful experiences, they can be avoided. So practicing without risk, another subtopic in the market. I mean, in the book, practicing without risk and side effects with paper trading. Paper trading is the technical term for trading without real life capital on a demo account. The expression stems from a time when there was no internet and when every step of the simulation was meticulously written down on a piece of paper. The term is still in use, even if the digital world now requires investors to make only a few mouse clicks rather than laboriously write out every transaction they complete. Paper trading allows you to try out to your art's content all possible strategies, markets, and trade instruments. This type of trading has a playful component as well. Yes, trading can be fun, trust me. Be creative and play with the markets. Go on a journey of discovery. Become familiar with market dynamics. That way you get a much better sense of your strengths and weaknesses. Okay, so this might be the negative, the disadvantage of me not trying paper trading before, because they have the flexibility of trying out different market, trade different something. But from what I've learned about those markets, the the press and all the stuff, when seeing them, I see that okay, these things they are not meant for me. I've already tried it out, and most times I just even if I don't apply money, trading view allow you to trade by just setting your orders, place order, you see how it plays out and everything. So most times I do try to just look backward on chart and try to see if my strategy works or not. So that way, so that way, I know what and what not to do. So that is that about that. So you'll be surprised how many experienced traders regularly take advantage of these opportunities. Professionals practice their trading skills in a real-time market environment to find out which strategies work best. So the way I personally do this one is like going on trading view previous price data, try to see what is try to see how my strategy plays out. Set my order, try to see if it works out or not. So still do that. So if we can calculate that as I just see it as block testing and for testing. Even back testing, most times except I just want to look out for something. I don't really because I love forward testing. That's the way I train my patience, my resilience, and then my calmness in the market. So each strategy undergoes a two-level test first before it is used. Number one, back test. How successful would the strategy have been in the past? See? So real time test is the strategy in the simulation profitable under real life market conditions. And there is another reason why I hate back testing because we know how the effect of news on trading these days and anything can happen. But there's no way you can factor in news through your back testing. No way. And if even if you do, ooh, excuse me, it will feel like not me. So that's the reason I prefer. So paper trading on demo accounts offer a rich learning environment. You can test different trading instruments, indicators, and markets in different periods. So something comes to my mind. We might be reading slow, but you can easily increase the speed of your video when you are watching or your podcast when you are listening. So train the implementation of your various trading ideas and plans. Gain practice in market-driven timing of your entries and exits. Test the different types of limit orders, variations of stop loss, and take profits depending on volatility. You will gain lots of knowledge focused on these benefits. You get a feel for market dynamics and volatilities. You learn about your own strengths and weaknesses. You find out which trading style and market niche best suits you. You learn which specific time frame lets you feel comfortable and offer the greatest benefits. So the list goes on. You should practice under the most realistic condition possible. That means you should make sure that your simulated trades are well prepared and actively managed, as well as fully documented and evaluated. But most traders don't adhere to it because they just believe all they will care about when paper trading is seeing blues. You should also act as you would in real life trade transaction. This strategy results in a continuous improvement process, which can easily take a few months to complete. Remember, you need discipline and perseverance. And I can assure you that the effort is worth the trouble. When you have found your style and niche, and you know where your strengths are best employed, you will have the mental prerequisite for successful trading with your own mind. You need discipline. Let me take that again. Remember, you need discipline and perseverance. And I can assure you that the effort is worth the trouble. When you have found your style and niche and you know where your strengths are best employed, you will have the mental prerequisite for successful trading with your own money. Tip, just do it. You'll be surprised by how hard it is to implement and maintain a trading strategy on a demo account across several weeks. Just do it. You will be surprised by how hard it is to implement and maintain a trading strategy on a demo account across several weeks. You will get an idea of how important dry runs are in real life trading with your own money. The processes must function smoothly. Another subtopic, paper trading. A paper tiger without emotions. A paper tiger without emotions. I guess the guy is trying to tackle what the side the disadvantage of paper trading I expressed earlier on. So a paper tiger without emotions. A common criticism of paper trading on demo accounts is that it has little to do with real life trading. Like I said, many traders lack the motivation or patience to trade in demo modes for several reasons. Number one, no true emotions are involved. Investors have no skin in the game, so to speak. No one loses any real life money in demo mode. There are no deviations in the execution of orders in this simulation. This does not reflect reality in volatile markets. Trading errors have no consequences. You can press the reset button at any time. In simulation, you are able to trade with unrealistic large sums. These amounts give you too much leverage. You see? So it is true that you'll be mostly emotionless in the simulation, and therefore it seems you are acting unrealistically. And that is a good thing because in paper trading, your most important task is to get to know your trader personality. You can then use it as the basis for finding your trading style and market niche. Almost as important is almost as important is the fact that you can implement your tricks as long as it takes to perfectly master the processes. If you lack the discipline in paper trading, how will you act when it comes to real life trading? By repeating defined processes, you create routines and automatic behaviors that can retrieve at any time, even under great emotional stress. Rehearsed, frictionless processes, rehearsed, frictionless processes give you the self-confidence and security you need in emergency situations where your emotions and your ego might come into play. Do you feel do you feel that simulations fail to provide the motivation or the tip? Do you feel that simulations fail to provide the motivation or the emotional kick necessary for you to take them seriously? Then take part in one of the many public stock market games. Okay? The competitions put you under pressure, or you can make public whatever trades you make on your modem, on your modem portfolio via a broker. If there's too much of a spotlight, you might organize a trading competition with your trader colleagues. You might be surprised by how difficult it is to implement your own strategies according to your rules across several weeks. So this is a good way of alleviating the disadvantages of trading with them accounts. So professional paper trading is purely a matter of attitude. They take the trade simulation as seriously as if it were real money. Then you will make the most out of it. Personal advice here is this. I would suggest an advice is if you are trading, paper trading, if you want to if you want to trade demo accounts, I would suggest you use the amount you know you'll be able to deposit. Because I could remember one time that I want to try demo accounts. I know I'll be able to load $100. So I only credit my demo accounts with $100. $100. Because I know how it is easier for me to view that $100. And this is years back as my own personal money. But imagine it is $1,000, $5,000, $10,000. I will not be able to view you is not, it is out of my reality there. It was out of my reality. So to not be to be kind of hard to but if you are able to load $100,000, then credit your demo account with $100,000. But if you know that it is only $100, $1,000, you'll be able to credit your real account. Then it is that exact amount that you should use in trading your demo accounts. So technical stuff. Many neuroscientific studies have proven how important the repetition of recurrent processes is. Brain scans shows how intensive training consolidates and strengthens neural circuits. So this is taking us back to chapter one, telling us how important it is to practice repetition of things, practice engaging with things so that at least you'll be able to do what you'll be able to kind of like learn a lot of stuff. So example, pilot trains for hundreds of hours in a flight simulator before being allowed to fly a real life plane. Even experienced pilots spend a minimum number of mandatory hours in the simulator cockpit. They intensely train processes and procedures. It is necessary to be able to record this automatically in emergencies where the pilot is under extreme time pressures, which is the prerequisite to be able to manage difficult situations, namely to be capable of decisions and actions at any time. So it's still repeating the same thing. Repetition, practice, 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 practicing a lot of times so that at least be able to get used to something and to be capable of decisions and actions at any given time. So the best place to focus on processes and structures is on the demo account. Real life trading might overwhelmingly, excuse me. So like the statement says, the best place to the best place to focus on processes and structures is on a demo account. Real life trading might overwhelm your trader side. You will avoid serious errors and painful, expensive experiences if you train your skills with paper trading. In in the trading phase, other execution deviations are initially irrelevant. Of course, you have to trade with realistic position sizes on your demo accounts and consistently implement your strategy. After you've concluded the testing and experimentation phase, and you want to train process flows, of course, it goes without saying that it makes no sense to juggle millions in the demo accounts where in reality you will be trading with significantly smaller sums, just like I've said. To have the desired learning effect, paper trading should be as realistic as possible, just like I've suggested. So the learning phase significantly increases your chances of success in real life trading. It means that you have successfully tested your strategies and can cope better with unexpected market fluctuations. Tip: after you add some extra money to your trading accounts, after you had some extra money to your trading accounts and you want to start with real life trading, start with small positions in order to obtain a feeling of safety with the processes you've trained on. Then you can slowly move toward any plan, larger positions. So that's a tip for us. So remember, develop and train your abilities in dissemination without the destructive impact of emotions. Frictionless processes are a prerequisite for emotional sovereignty in real life trading. Another subtopic, pattern recognition, where practice make perfect. The king of all discipline in trading is pattern recognition, which we do always. So we are here to recognize patterns. We are here to recognize patterns. Okay, let's continue, please. So pattern recognition, where practice makes perfect. That's another subtopic where practice make perfect. The king of all discipline in trading is pattern recognition. And sorry, I paused the video to quickly adjust my positions um, on my trades. So the king of all disciplines is trading is pattern recognition, which is what we do. Higher highs, higher lows, recognizing reversal pattern, continuation pattern, different type of reversal pattern, different types of support and resistance levels, and other stuff. So though you certainly have to master processes as steps of the trading craft without even having to think about them. The ability to recognize recurring patterns is trading's true. Okay. So your goal is to gain a statistical advantage, the hedge that traders often talk. So statistical advantage, the hedge that traders often talk about. By taking into account the increased probability of those price developments that repeatedly occur in your strategy, your ability to factor in these developments to your trading practice is precisely the reproducible advantage that determines your profitability over the long term. Let's take that level again. Your ability to factor in these developments to your trading practice is precisely the reproducible advantage that determines your profitability over long term. If you're able to recognize these patterns, repeated something, that will determine your probability advantage over time. Another subtopic, explicit pattern recognition, technical analysis, and much more. Okay, when talking about patterns, the trading world condons off one set by labeling them explicit patterns. These subsets include repetitive chart patterns, fundamental interrelationships, and market price action, as well as calendar effect and all seasonal patterns, all of which are governed by statistically variable regularities. Example, typical chart patterns that are set to indicate a trend reversal are double top, or double bottom patterns, triangle patterns, and head and shoulder patterns. These patterns can form the basis of a profitable strategies. So I want to shift something in here. With my own experience, all these patterns are almost the same thing, but I try to know where all these double tops patterns, triangular patterns, head and shoulder patterns are coming from. And if you study structure to some extent, you will understand where they are all coming from. Hmm. So, technical analysis is a popular and widely used method to evaluate historical price action and current trends using charts of individual securities or of entire markets. The assumption is that promising entry and exit levels can be derived on the basis of price support and resistance, momentum, volatility, and direction of the current trend. Traders assume that obvious patterns will repeat themselves and that similar price movements will occur in the future. If the probability of this occurring was more than 50% in the past, we can derive a winning trade strategies from this contest. So let's take that again because it seems to be a very long paragraph and we need to comprehend it. So technical analysis is a popular and widely used method to evaluate historical price action and current trends using charts of individual securities or of entire markets. The assumption is that promising entry and exit levels can be derived on the basis of price support and resistance. Like I said, support and resistance is level are what we are trying to capitalize on when it comes to trading. Momentum, volatility, and the direction of the current trade. Traders assume that obvious patterns will repeat themselves and that similar price movements will occur in the future. If the probability of this occurring was more than 50% in the past, you can derive a winning trade strategy from this contest. Even personally, I don't need more than 30% to win. Initially, when I was using 1 to 5, I don't need more than 20% winning rates. So, but having 50% winning rate pro, like I said in our trade ideas and signals that I do give daily now, I've made mention that we are in version 3.0. So, personally, I believe at least we should be able to move close to that 50% winning rate to 70, 80% winning rate. Yeah, I believe because we imbibe higher time frame entries now. That's what we use. So it gives us a lot of layer time to do what? To capitalize on what is happening within the market. So I'll take it that way. So to have 50%, so you can do if the probability of this occurring was more than 50% in the past, okay? If you backtest it or you look through the historical price data, and you figure out that it's occurred more than 50% in the past, then you can derive a winning trade strategy from this contest. So it shouldn't surprise you that the kind of pattern recognition I talk about here requires the hard work and a lot of practice in simulation mode before you risk your money. You need to be sure that your trading ideas and strategies will work. In other words, you should carefully check whether the identified pattern can be translated into profitable strategies. If it hasn't worked in the past, it probably won't work in the future. The process is commonly referred to as backtesting. And something is coming to my mind now. So we are reading there are a lot of alignment with what the writer is saying. So all these things are giving me guarantee that future that success is near. Success and profitability is near. Except we don't have any. And the essence of reading and studying psychology is for us to see ourselves through the mirror and see what, through the lens of the writer. For someone to write 300 pages of book, come on, it's not an easy task. Have you tried to journal? If you've tried to journal and you see how difficult it is to write. Talk less of now writing and presenting a book. And even as is for dummies. So the person actually knows what he's doing and is a certified financial analyst as well. So giving us some kind of information about markets and about what proper psychology and what guarantees success in trading is. And if we are seeing ourselves through, putting ourselves through what he's saying, and there is a lot of alignment with what he's saying. We know that our future, there is success is guaranteed in our future. So we're going to be successful massively, massively, massively. It's a matter of time. We are getting there. We are closer. And this year, even God has promised me is going to be a massive evidences. There are going to be a lot of massive evidences. This is my year of evidences. So there are going to be a lot of evidences this year. So we're putting ourselves through what he's saying and we are in alignment. And that's the reason why we are reading. Because we put ourselves through a lot of things that he's saying. And once he's saying it, then we automatically know the things that he's saying that we are not in alignment with, we try to correct it. But most of the things he's saying we are in alignment with it. We already know, we know, and we are learning. So I believe personally that we're going to grow from there. So that's that about that. And I believe we continue to amaze, we do amazingly well by God's grace. So let's move forward in our reading. It said Jeze Livermore, 1877 to 1914. Often celebrated as the best trader of all time, didn't put much stock in using technical or fundamental analysis when it came to forecasting market trends. He felt that positioning yourself at the early stage and anticipating movement is just a game of luck. The secret of his success was to prepare his reaction patterns and then to wait patiently for specific market signals. Pattern recognition include the ability to recognize one's own thinking, feeling, and behavior patterns. So when you systematically analyze the profitability of your trades, you soon gain valuable tips about your trading style. Take a look at these questions, for example. Are you more successful with small or large positions? Are you more successful in volatile sideways markets or during stable trend periods? Do you tend to prefer long or short setups? Do you follow the trends, momentum trading, or go against trends, contrarian trading, and try to time the market's movements or a trend reversal? Is there a connection between certain emotional states and your profitability? So the list goes on. Learn to observe yourself and write down any patterns that catch your eye. Based on subsequent analysis, you can further develop your setups and strategies to find out how to detect and interrupt problematic psychological patterns. Warning: everyone is constantly on the lookout for promising patterns in the market. And if you happen to identify a repeatable trading edge, you can safely assume that you are not the only one. The hit rate of your strategy won't always be over 50%, like I said. In addition, market conditions can change at any time, and your advantage can dissolve into thin air. I experienced last year, October to around the August, October, November, December, September. Yeah. So the strategy was so pure, 100%. So I spot the setup is giving bastard money. I was calculating millions. Jesus Christ. So I was like, wow, if this thing should continue this way, we don't blow. But before you know it, it was one afternoon. In fact, very pure, clean setup. Very nice one. I entered the trade and, news came out and everything changed all of a sudden. And from that moment onward, bro, the strategy begins to fluctuate. So, and that's the reason why we have to do what market condition can change at any time. So, I learned that the market condition in association with that trading strategy has changed. So, we have to still move on into another one. So, we are in a stable something like, and I believe personally that we will do it. we will definitely do well over time. So remember, stay alert and flexible. Use the opportunities that present themselves and regularly adjust your strategies. The search for a surefire strategy is understandable, but there is no sure thing in this stock. Even in forex markets, there is no sure thing. Intuitive pattern recognition, that's another subtopic. The sixth sense is one will be developed over time, and I'm sure we're going to get there. We will definitely get there. We definitely get the intuition, and it's going to be a very, very massive something in the markets. Intuitive pattern recognition, the sixth sense. Explicit patterns are obvious and understandable for every trader, even if it might take several years of experience for you to identify patterns at an early stage and to act accordingly. Still, it is not rocket science. Recognizing implicit pattern is a horse of a different color. First, you want to discover the secret of implicit pattern in a how-to book. It's not possible. So they cannot be perceived with the naked eye and they can't be grasped intellectually. The intuitive ability to recognize implicit patterns is based on implicit knowledge that is anchored deep in the subconscious. Let's take that statement again. The intuitive ability to recognize implicit patterns is based on implicit knowledge that is anchored deep in the subconscious and can be acquired only by experience and repetition. It is only through experience and repetition that you can gain this intuitive implicit patterns. Yeah, we are getting there. Research shows that very experienced traders are naturally in a position to see complex patterns in certain market situations. Let's take that again. Research shows that very experienced traders are naturally in a position to see complex patterns in certain market situations without being able to explain how they recognize them. Yeah. So this has little to do with extrasensory perception. It has little to do with extrasensory perception. Experienced traders can often perceive the smallest deviation or subtle changes at a subconscious level. Proof that the human brain is a perfect pattern recognition machine. Hmm. I hope we get that. Experienced traders can often perceive the smallest deviation or subtle changes at a subconscious level. Okay? Proof that the human brain is a perfect pattern recognition machine. It is continuously processing all sense impressions by checking for regularities and whether they comply with existing rules. Intuitively comparing this with previous experiences. When a pattern is perceived, when a pattern is perceived, it is automatically compared with patterns stored in memory. Okay? When a pattern is perceived, it is automatically compared with the pattern stored in memory. If the pattern is known, the neural circuits are strengthened. If it is new, it is saved in our memory, stored of emotional experiences for data use. In case this occurrence returns, physical reactions such as much cited gut feeling serve as useful somatic markers, indicating when the brain detects a pattern. Most times, sort of all these things happens without our conscious mind. So remember, Have made some adjustments the other time. So I'm trying to check through it. Remember, generally speaking, it is easier for the brain to identify known patterns than for it to recognize and store new. So new unknown patterns. Simply put, it is much harder to recognize things we don't know. Perhaps this explains the difficulties that even experienced traders face when market conditions change fundamentally. Thank God for this. I'm able to sense it almost immediately when market condition changes because I don't try to implement all this new style of trading that are coming out here and there. I give you fixated something. You can't beat support and resistance with combined with structure because those techniques has been here as far as the market is as long as the market exists. So all those levels as you know, all those patterns have been here. Trend. You can't deny trend. It's always market is only moving in three ways. Uptrend, downtrend, sideways. Area of struggle, resistance or support levels. Some levels will support price and some will resist it from going up. So hence term PDARs. There are some psychological levels in the markets. So immediately all these things stops holding and you start seeing. So there are moments where internal structures were the one serving mostly as the support and resistance levels in the market. Sometimes it shifted and we began to have different type of support, different type of levels. There was time that it was just real value gap. There was time that it was just mitigation block. There are times that it was breaker block. There are times that it happens to be a proportion block, other block. The period of other block has even gone. Because a lot of things are happening. Only major higher time frame other blocks are holding, at least for now. So professional traders will report making decisions based on gut feelings or intuition. This is a kind of subconscious intelligence, the result of repeating similar patterns hundreds of times. Intuition is outside the range of normal sensory perception. Intellect cannot explain this special instinct for market movements. Rather, this ability is the result of years of experience and strong powers of observation. If you are distracted or unable to concentrate, you lose this special gift. Good intuition requires your undivided attention. That's why an emotionally balanced state is vital. That is why an emotionally balanced state is what is fatal. So let's take that again. Intellect cannot explain this special instinct of for market movement. Rather, this ability is the result of years of experience and strong powers of observation. If you are distracted or unable to concentrate, if you are distracted, unable to concentrate, you lose this special gift. So when we're trading, no distraction. So good intuition requires your undivided attention. So that's the reason why when you're starting out to trade, you must make up your mind that you really want to do something with this thing. You are not biased. You don't want to be thinking that you have um you have to give up. Giving up should be out of your something. So you must be thinking appropriately, trying to understand what you are doing. So you must at least give 100% attention to trading. Know that you really want to do this thing. So that's why emotionally balanced state is vital. Okay, there is a subsection here, and IOWA gambling experiments. Okay, how emotions help in early pattern detection. So, in an interesting card playing experiment, neuroscientists were able to prove that humans make decisions on the basis of emotions and physical reactions without knowing what made them decide the way they did. Most trial participants in the experiment were in a position to subconsciously anticipate repetitions of recurrent card patterns. The experiment demonstrated that somatic makers, physical indications like sweating or a grumbling stomach, proceed precede a conscious decision. The group of trial participants with brain damage in certain emotional areas were not in a position to recognize advantageous strategies in the card games at an early stage. Due to this lack of emotional reactions, the learning effect occurred only at a much later point. Okay, it's talking about an experiment that was conducted with some groups. So gut decisions are good mostly when you have implicit expert knowledge and a lot of experience. Then your gut feeling becomes a darn clever mind. Professional traders have developed fine antennae, which is antenna for stock price movements. They have learned to trust their sixth sense. One, if you have little experience in trading and insufficient expertise, do not rely on your intuition. Good intuition is based on many years of acquired abilities to spontaneously recognize implicit patterns and to be able to bring to the surface subconscious knowledge. That's the warning for us there. Recognizing and developing your trading strengths. Another subtopic in the market, recognizing and developing your trading strengths. The popular leadership development motto says something along the line, it is important to know not only what you want, you also need to know what you can do. The popular leadership development motto says something along this line. It is important to know not only what you want, you also need to know what you can do. Humans naturally spend more time and energy focusing on eliminating weaknesses. This effort generally doesn't pay off. Weaknesses rarely turn into strengths. You will probably only manage to become average in that area. If you never were really into sports, for example, you will never become an exceptional athlete, even if you train intensively. Hmm. So it's going to be very, very hard for us to turn our weaknesses into strength. We only be average at that. And that's what I'm doing currently. I've tried to identify my weaknesses and what all those stuffs that sound strenuous to me, that I find difficult to do comfortably, I've reduced them. I've reduced, I've reduced them. So try to focus on what I'm good at, what I can easily do, what I can, easily achieve. So without stress, I don't want to stress my mental energy. I want to reserve the power for something more cogent. I have a lot of things going on around me. So accepting weaknesses. If you ever want to truly advance your personal development, you need to face your weaknesses. Every change is a challenge because you need to learn to recognize and accept your personal deficits or defects without damage to your self-esteem. Admitting weakness is a challenge to someone's sense of self. Okay? So your ego is supremely powerful when it comes to hiding unpleasantness or sweeping them under the carpet. But weaknesses don't just disappear if you block them out. Quite the contrary. They steal your chance to learn. That means stagnation. And we don't want to be stagnant. So suppose that one weakness is that you lack the self-discipline to keep those limits. You experience major losses, but you subconsciously block out the incorrect behavior. You don't want to accept this as a sign of lack of discipline, and this inability to face facts ruins your performance. That mean no loss. Anyone. Yeah. So it's either we win or we lose. Something comes to my mind, and that's so it's either we win or we lose our position when trading. So if we win, good. If we lose, also good. With what is it called? Something is in place. Stop loss is in place. The profit is in place. And it's a calculated risk for that matter. So we have nothing to be scared about. So are you being honest with yourself? That's a very massive question. Do you know your trading weaknesses and shortcomings? Can you honestly admit your deficits? Or do you play the victim and always blame the market when things go badly? Mm, no. I am sure your experiences with paper trading will force you to recognize some of your weak points. Okay? So if you recognize that a lack of discipline is a specific Achai's ill, you can take steps to counteract that weakness. You can, for example, practice the rule complaint implementation of your trading plans on a demo account until you have internalized the processes necessary to keep you focused and on track. Admittedly, this process requires a lot of patience, but it strengthens your self discipline. A weakness is a learning task with 3 steps. Okay? So this place is telling us that weakness is a learning task with 3 steps. Number one, look for the mistakes in yourself before looking for weak spots elsewhere. Okay? Recognize and accept that weaknesses are a normal part of your personality. Nobody is perfect. I've always said that. No strategy is perfect. Though nobody also is perfect. Take the necessary steps to keep your weaknesses to bay. Whew. Take the necessary steps to keep your weaknesses at bay. Remember, you will learn from your mistakes only if you are able to demonstrate one, the necessary willingness to accept mistakes as part of you. And two, the humility to see that you are not perfect. Nobody is perfect. Ignoring or stamping out weaknesses doesn't work in trading. They are part of you, just as your strengths are. The whole is your personality. This is simply clear-cut evidence of life's imperfections. Nothing more and nothing less. Me, personally, I have a saying that our imperfections makes us perfect, and that's for sure. So having bad experiences is part of the nature of trading. Even losing streaks statistically occur more frequently than is commonly believed. Accept that each trading loss is an opportunity to gain new insight and better understanding of the market or your setup, which is true. It helps to write down losses straight. Make a table with 3 columns. In column one, write down the loss trade. In column two, write down the reason for the loss and what you have learned. In column three, spell out what you can actually do to improve your performance in your next trade. This exercise can help you develop yourself. Tip: be consistent when it comes to carrying out your trading plans and following your rules. That way, you can keep your weaknesses from adversely affecting your trading performance. Developing your strengths. That's another subtopic. Representative surveys show that most people believe it is more important to concentrate on their weaknesses than on their strengths in order to improve themselves. This is the result of our educational system. This focus on eliminating defects and correcting deficits starts in school. The system wastes your energy and traps you in mediocrity when it comes to trading. Hmm. That's true. Personal weaknesses are no excuse for wallowing in exaggerated self-doubts. Hmm. Sorry. I was carried away. Personal weaknesses are no excuse for wallowing in exaggerated self-doubt. It is much more effective to identify and develop your strengths. This leads to outstanding achievements. If you are good at, develop it. So the success factor in trading lies in knowing your own natural strengths. What skills and talents do you bring to the table? Here are some examples of natural strengths. Personally, I know I hate taking fast decisions. I hate responding to things very, very fast. So I like to make plans, follows the plan. So instead of quickly identifying, that's the reason why I hate scalping. Because not that I don't know what I'm doing, but I will make it up because I hate fast decision making. So that's my weakness. But my strength is following plan, you know, preparing, myself, factoring in, trying to look for possible something in the markets. So yeah, are some examples of natural strengths. You are a quick learner. You possess pronounced analytical skills. You stay flexible and adaptable. I think I have that. You maintain inner peace and a clear overview of your current circumstances. I can score myself 50-60 in that. You demonstrate mental and physical resilience. Wow. I'll give myself 150 in that. You can count on your gut feelings and your intuition. Yes, most times. 70. Remember, are you using your talents when you trade? Consider carefully when you can do what you can do to take full advantage of your true strengths. Otherwise, and that's the reason why the way I can take full advantage of my true strengths is through by utilizing my strategies, which is excuse me, please, which is trading structures, and it gives me enough time to prepare, to plan accordingly, so and avoid errors like this. So, um, otherwise, you will be like the 80% of people out there who fail to put their abilities to use in their profession. Tip: you are your own biggest critic. Accepting yourself with all your strengths, weaknesses, and needs isn't always easy, but do it anyway. The likelihood that you will be a successful trader if you develop your strengths and talents is much greater than if you work. The likelihood that you will be a successful trader if you develop your strengths and talents is much greater than if you work only on your weaknesses. Okay, develop your strengths, so it's greater than when you only work on your weaknesses. My weaknesses, I try to limit them as low as possible. Let me check my trade. Wow. Okay. It is possible to get a grip on your later wage process oriented and rule-based trading. Continuous further development creates success experiences that make it easier for you to accept your deficits. Success motivates and creates self-confidence. Find your trading strengths and then strengthen them. That's something for us to remember. Find a market and trading style that uses your strengths in the best possible way. At the same time, be sure of to weaken your weaknesses by consciously accepting them. as a part of who you are. So another subtopic in the market, developing your change competence skills. Hmm. When market something is changing, you have to develop our we have to develop our change competence skills. Yeah, developing your change competence skills. Financial markets are complex and change dynamically. Financial markets are complex and change dynamically. Not, yes, they are also unfortunately unpredictable by nature. Rules and correlation that have worked for years can lose their validity in the blink of an eye. So example, shocks from outside the system can trigger technological developments that earlier would have seemed inconceivable. Disruptive innovations can accelerate the complete restructuring of an economy. Who would you have guessed, for example, that the global lockdown that occurred as a result of a coronavirus pandemic would have resulted in such a rapid digitalization of economic processes? The truth is, the year 2020 turned on its head much of what experienced players in the financial market had experienced in the past. Traditional valuation benchmarks and causal relationships seem to have been overridden. As a result, the valuation of the stock market has completely been decoupled from the real economy. Okay, I'm trying to digest that level. Let's take the paragraph again. The truth is, the year 2020 turned on its head. Much of what experienced players in the financial markets had experienced in the past. Traditional valuation benchmarks and causal relationships seem to have been overridden. As a result, the valuation of the stock market has completely been decoupled from the real economy. Okay, are they? The billions intended for rescue programs from central banks and governments has triggered a glut of liquidity that has flooded the financial markets. The free play of market forces or the control function of prices seem to have been undermined for now. Okay, let's take that as it is. What does that mean for you in trading terms? If, for example, you are acting as a position or swing trader, you can no longer rely on traditional analysis. In the long term, the partial excessive over-evaluation in some sectors will correct itself. But this can, under certain circumstances, take years. If you have a shorter investment horizon, you should take other criteria into account when it comes to your trading strategies. For very short-term oriented traders, scalpers and day traders, for example, fundamental analysis play a subordinate role. What can you learn from these examples? Change is the only constant, and markets are constantly changing, and you have to change too. If you want to continue being successful at trading, if you stand still, you will go backward, just like on a treadmill. In other words, you are forced to continually develop your strategies, and trading plans. Admittedly, this requires a high degree of flexibility and adaptability on your part, but you have no other choice. You have no other choice other than to change. Okay. So remember, it is your task. Remember, it is your task to continually design your own change process, despite any setback that might occur, and to refuse to fall back into old patterns. For this task, you need solid processes and routine as a bulwark against emotional reaction in difficult market forces. But you also need to remain flexible and continually adapt your trading to changing market conditions. That is the core of change competence. It is your task. Remember, it is your task to continually design your own something, okay? To continually design your own change process despite any setback that might occur, and to refuse to fall back into old patterns. For this task, you need a solid processes and routines as a bulwark against emotional reactions, overreactions in difficult market phases. But you also need to remain flexible and continually adapt your trading to changing market conditions. That is the core of change competence. So successful trading is a permanent process of development. It's a permanent process of development. Development in terms of continuous growth, permanent in a not changing something. So successful trading is a permanent process of development. Your willingness to change is a key competence in trading, and it is fundamentally a matter of attitude. So psychological studies about successful changes indicate two prerequisites: process orientation, intrinsic motivation. So the next few sections look at both prerequisites in greater details. So processes are your shelter from the storm. Without planning and structures, you can't focus on your development process goals. Without planning and structures, you can't focus on your development process goals. Direct access to markets makes it quite tempting to jump right in and place a few orders in real life trading. You may even succeed and profit from it initially, but what you are doing is speculation, not professional trading, and it won't get you. So let's take that level again so that at least we're able to digest it appropriately. Processes are your shelter from the storm. We are always facing storm in trading. So without planning and structures, you can't focus on your development process goals. Direct access to market makes it quite tempting to jump right in and place a few orders in real life trading. You may even succeed and profit from it initially, but what you are doing is speculations, not professional trading, and it won't get you far. So you need planning structures, which means trading strategies. For you to have success in long term, you need smoothly functioning processes. You also need to have clearly defined goals for what you want to achieve with your trading. Also need to have clearly defined goals for what you want to achieve with your trading. So for you to have a success in the long run, you need smoothly functioning processes. That's a statement. You also need to have a clearly defined goals for what you want to achieve with your trading. Okay. And every single step you take from strategy development to implementation of each trading plan aims at that goal. This structured approach allows you to withstand the emotional waves that are sure to roll your way. You control the processes, the market determines the amount of trade profits you make. That is why process orientation is the key to success. Remember, professional professional setups are the prerequisite for profitable trading. Establish firm rules about which setup with you will trade with and in which market phases. That way, you are sure to have the right setup depending on market volatility. Many traders are afraid of the efforts required to include fee structure and practice their processes. However, if you are not fully convinced you know what you are doing, you will lack the motivation and emotional strength to pursue your goals. You will end up following the trading plans and rules you have established in half-hearted way, and you won't learn from your mistakes. Your development process stagnates. Believe you get that. What are the triggers for an individual willingness to develop? In theory, it stems from the positive emotional experiences that you internalize. Success experiences are truly motivating, but they are not sufficient when it comes to trading. Yes, just like in the book I studied today, dopamine something is very, very good. It helps you to keep succeeding, it helps you to get something done. But in trading, you will hardly experience that dopamine something, except when you win. And most of the time you win, and you allow it to vary. You are not to even feel heavy. You are to feel indifferent with the outcome of your trades. You are to feel indifferent. Losses must not weaken you. Winning must not inflate you, which means you must be balanced. And if you are to be doing that in trading, you will know that your dopamine level is going to be affected. So I continually experience this in my coaching process. So what are the triggers for an individual's willingness to develop? In theory, it stems from the positive emotional experiences that you internalize. Success experiences are truly motivating. Success experiences are truly motivating, but they are not sufficient when it comes to trade. So without strategies and a plan, you may confuse luck and ability. Short-term success can be deceptive. Honestly, I continually experience this in my coaching processes. Practice. Occasionally raking in a big score tricks people into overestimating their own abilities. Wow, and that is true. So warning, short-term profits makes many traders cocky, which is true. The decisive aspect of is a functioning strategy, not random gains. Such traders too easily overestimate themselves. Greed is not a strategy. Greed is not a strategy. Humans change only when they are ready for it. The willingness to change usually comes with the realization that something has to change. According to psychologists, crises are an opportunity for change. Crises shatter your foundations and force you to act. In my experience, traders understand what is required of them only after they have experienced large losses. For more on this topic, okay? Unfortunately, in the trading world, only those painful experiences motivate and move traders to undertake serious change. Remember, define your goals in your trading processes and not in terms of absolute results you hope for. Initially, it is all about trading well. Concentrate on what you can do every day to improve. Motivating yourself for change. It is not enough to know that you need to change your trading. You must want to do it. Traders who still don't give up despite serious loss have an intrinsic motivation to establish professional processes. The internal drive provides the necessary discipline for further development. Change competence arises when you manage to develop yourself continuously. In particular, this means rule-based trading must become part of your routine. If your trading strategy is profitable, the profit will set in automatically. And that's true. You don't have to worry about it. Then it is your skill driving your success, not mere luck or coincidence. And if your trading strategy is no longer making profits, you know that the market condition may have changed, then you adjust your strategy accordingly. Technical stuff. Psychologists often speak of self-efficacy, where someone has developed the internal conviction that they can successfully navigate difficult situations. Without this firm, excuse me, let's take that technical stuff again. Psychologists often speak of self-efficacy, where someone has developed the internal conviction that they can successfully navigate difficult situations. With, Without this firm belief in your own competencies, you are incapable of acting effectively. Without the firm belief in your own competencies, you are incapable of acting efficiently under stress. Experiencing success strengthens your self-efficacy in uncertain environments you can't control. It is important for your self-confidence to experience self-efficacy. And what is self-efficacy? Where someone has developed the internal conviction that they can successfully navigate difficult situation. Okay, so warning: the belief in one's own ability sometimes leads to an illusion of control. Don't let that happen to you. Your mantra should be: I can't control the market. I have no influence on what is happening there. Don't forget that. Even when you are experiencing a winning streak, stay adaptable and follow the market closely. Subtopic: gauging your aptitude, personality traits, and competencies. In trading, you are constantly making independent decisions in an environment of risk and uncertainty. For that, you need to be equipped with a special ability for self-organization. You won't get far with expert knowledge alone. You must be able to implement and adequately apply your knowledge. Activation makes one Activation makes or breaks the competence concept. It is all about your ability to act, the ability to find means and solution and act in an accountable manner. Acting in accordance with your own organizational principle requires that you are motivated to initiate the right steps. What drives you when you are trading? You know that trading is personality development and that it requires developing mental strength. How can you develop a success-oriented mindset? The following performance formula clearly demonstrates how you behave when you are trading and your potential performance. Performance equals to desire multiplied by ability and multiplied by environment. Desire describes your intrinsic motivation, namely your inner drive according to your own needs. In short, it is your commitment. It is your desire that makes your commitment. Ability describes your actual performance, namely your self-organized capacity to act. In short, it is competence application of your knowledge. That's your ability. So, environment describe the context of the performance frameworks, namely the given market environment as well as your trading strategies and risk. That's your environment. So, the performance is determined by your desire multiplied by your ability and multiplied by your environment. You need all these three performance factors. It is the combination and interplay of desire, ability, and the environment that leads to performance. Combination and interplay of desire, ability, and the environment that leads to performance. The performance formula will be close to zero if any of the factors are close to zero. Your desire is close to zero, your performance and ability will be close to zero. Your ability, if it is close to zero, and your environment. Whew. So I discuss the desire and ability performance factors extensively in the next couple of sections. Just a quick note before jumping into our discussion. Desire can be captured by means of motive profile, and ability can be illustrated using competence profile. Your personal competence profile. Competencies consist of much more than technical knowledge and qualifications. Only the application of your knowledge creates a competency. That's why competencies describe one's ability to set in motion independent action. You can use competence model to test which of your competencies is stronger or weaker. In the competence model one model, I use In the competence model I use here, I differentiate between four basic competencies: personal competence, activity and decision making competence, methodological and professional competence, social communicative competence. From these four basic competencies, you can derive 64 additional key competencies. In general, basic competencies depend on context and are related to action. That means that they come into effect in real world situation. By contrast, personality traits are independent of the situation. Once character doesn't change, competencies, however, do, depending on internal and external conditions. The code competencies was developed in the 1990s to record and strengthen one's performance and self-organizational skills based on the scientifically based competence model that has been continuously developed since 1996. The model has been verified and used widely on a national and international level. The competence model, which is universally applicable, is based on a basic capacity to accurately reflect competencies under normal as well as difficult working and living conditions. This distinction is important in trading. You may respond completely differently under stress and emotional pressure than when you are in a real estate. Experience shows that some traders lose access to their competencies and make avoidable mistakes when psychological pressure is great. The reactions can vary considerably depending on how pronounced your four feet of competence are. Ask yourself the following questions. Number one, are you capable of acting and making decisions under stress? Personally, I don't like making decisions under stress. I shut down most times, but I quit. I wait till the stress subsided and take my something. But most times, if I'm caught in between corners, I will still try and do what, see what I can do and what is normal to do. Do you react impulsively and tend to act merely for the sake of acting? Can you say over trading? Do you become rigid and stare at the market, frozen like a deer in the headlights? Do you hide behind charts, analysis, and models, and thereby remove yourself from the responsibility to make decisions? Do you discuss potential trading? Do you discuss potential trading strategies endlessly with real or virtual trading colleagues because you are afraid of the consequences of your decision and therefore don't act? The code, remember the code competence profile shows your competence under normal conditions as well as difficult conditions. He actually gave us a website here which is code concept spelled KO. Let me highlight it here. KODEKONZEPT.com. www.codeconcept.com. So you must not lose the access to your competencies under difficult conditions. This requires mental strength. Also, keep in mind that in contrast to personality traits, the capacity to act can be developed and expanded into old age. Okay? In other words, you can learn and develop key competencies for lasting successful trading. I have filtered out the relevant core competencies for trading from the 64 key competencies. There is a certain range for each individual competencies. The result is a set of profile requirements for your success in trading. Your personal competence levels are automatically entered into the target profile when you complete the online test. The result is used to determine your current position and provide you with some orientation. Comparing your personal competence profile with the required range you res- shows you possible strengths and weaknesses. You will be above the benchmark for some competencies and under it for others. Certain competencies are particularly important for trading. Your personal competence profile provides you with an initial overview of your talents, specifically whether you have the competencies required for trading. You also get advice that will help you find the trading style that suits you. Okay. Yes, we have to visit the website and take the test. Figure 3 to 1 shows 3-1. Figure 3-1 shows an example of a competence profile for traders. The spectrum show you where you should be in an ideal situation. Again, your personal competence level are automatically entered into the display when you completed the online test. So the competence atlas see figure 3 to 2 shows you how the 64 key competencies spread across the four basic skills. The competencies labeled in the light color triangle are relevant to trading requirements and are in an integral part of the requirement profile. So I'll stop here to quickly go to the online so that I can have deep understanding of what the man is discussing here. So we are on page 65. Let me quickly go. Coming back from the website, it's not written in English. The website is not in English language. So try to figure out where to quickly convert it, to convert the page to English, but couldn't find it, so I have to just leave. So your personal motive profile. What is your intrinsic motivating in trading? What is your intrinsic motivation in trading rather? What influence your mindset? If you think these questions are easy to answer, you are wrong. It is never easy to find out what your innermost self truly wants. So it is never easy to find out what your innermost self truly wants. Personally, I believe it's freedom. I just want freedom. Freedom of taking decisions. Freedom to just do whatever I want to do. Because I've answered several other questions like this in the past. In my experience when we are developing trading plans, trying to know why we are trading, and we ask this question with with 10 more questions. So it's just like asking the question, why are you trading in the first place? It's not because of money, or money is involved. I know money will come, at least just for it to sort my basic something. But I need freedom. Now it's because of freedom that I'm trading. Because the next question we ask you, why? Why freedom? Why do you need freedom? Then you answer the reason why you need freedom. So the answer you give, you still ask another why on that same question, me on that same answer. So that way you ask the question in 10 places to figure out why you need all these things. So this one will boil down. So you cannot just ask the questions. So I'm in support of it is never easy to find out what your innermost self truly wants. So you can find numerous personality tests online that are said to reveal your personality traits and characteristics, all in the service of getting to the bottom of your motivation. Generally, these are extensive online testing procedures where respondents answer or assess statements. Such tests are used for self-assessment as well as for external assessment. Target profile competencies. So planning ability, analytic capability, what is some things here? Codes, competence, channel trader competence. P means personal competence, activities and decision making, and methodological and professional something. The requirements profile for traders. So okay. M means methodological and professional competence. And S means social cumulative competence. I guess if you get the book, you can just easily get that. So, and if we look at it, planning ability, we have to fall in between 6 to 9. What does 6 represent here? Significantly developed. So, our planning ability, it must be significantly developed. Analytical ability, same thing, must be significantly developed. And judgment must be significantly developed. Objectiveness, same thing, must be significantly developed. Then conceptual strengths, significantly, and all these abilities, resilience, consistency, result-oriented action, all these things fall in between must be significantly developed, strongly developed, and very strongly developed. Problem solving capacity, openness, and all this stuff. So, in my practical experience with professional as well as private traders, the motive structure analysis of MSA has proven itself to be the most reliable one available. So, the MSA website is MSA profile without he.com. So, it's a resource oriented procedure that represents your individual motivational structure based on a total of 18 basic motives. It captures your emotional core character as well as your intrinsic drive and self-motivational measures. So competence atlas for targets, profile for trader competencies, personal competencies, loyalty, value orientation, credibility, personality, something. Let's check the underneath social, cumulative competence, methodological, and other stuff. These are all the somethings. Personal competence, activity and decision making. All these things we can check it out on the website stated above. So your internal driving forces and motivations are completely individual and can be compared to a personal fingerprint. The motivational profile provides you with insight into your personality. In trading, your character traits are more important than your qualifications. Which ones are helpful and which ones are not. It is all about recognizing at an early stage whether you have the mental strength or whether you can develop it. Ask yourself the following questions. How suitable are you for the challenges you will face as a trader? How do you deal with stress, risk, and emotional pressures? What is your strength and energy potential? What truly moves you deep down and what drives you forward? What motivates you to permanently be at your best? So the MSA analysis determines your individual motivational structure. When you have recognized and understood what drives you, you may have the key to developing your performance, stress resilience, emotional control, and self-discipline characteristics that are critical in trading because this is where the psychological prayer is particularly bothersome. A better understanding of your personality will help you recognize personal orders, self-help, self-knowledge helps to develop mental strengths for trading. From all that we can determine, there seem to be timeless, stable character traits and intrinsic basic motives that form the emotional core of a personality. These basic emotional drives change little over the course of a lifetime. Your motivational profile holds up a mirror to you and explain why you behave the way you do when trading. The expression The expression of fundamental motivation is naturally a special performance motivator. You do the things you like to do well, and they motivate you. Stress factor arise when characteristics require a particular situation are ones you lack or lack a sufficient degree. The following motives have proven themselves over time to be worthy of attention. Desire for knowledge, theoretical versus practical. Adherence to principle oriented versus purpose oriented. Relationship to power, leading versus being led. Status seeking, elitist versus down to earth. Relationship to other, structured versus flexible. Attitudes toward freedom. Going it alone versus team oriented. Desire for close personal relationships, sociable versus distanced. Desire for recognition, sensitive versus self-assured. Competitive drive, com- combative versus harmonious. Attitude toward risk, willing to take risk versus aware of the risk. Aware of the risk. The characteristics listed here indicates that each individual basic motive has two poles. They complement each other, which means that you will always have both drives. Though the expression of the drives can be quite different, the MSA test evaluation shows the individual motivational expression specified in percentage points normally distributed. The sine wave curve shows your personal characteristics in relation to the population as a whole. Okay, so I'll post it here so that at least you can figure out the motivation system GMVH. So trader example, knowledge theoretical, pragmatic, motivational profile as a graphical overview. So the two complementary drives, all these things are technical stuffs, and personally, I must confess I don't really get it now. But sometimes it's important that we check through them. If you understand them better, you can quickly just go through them. But I don't see all these things in relationship to what I'm trying to learn from. But nonetheless, the technicalities of this has taken out its what is it called? There is something, but it's for dummies, and they have to observe everything properly. So the two complementary drives are clearly visible in figure 3.3. The lightly shaded bars shows the level of the drive on the left, whereas the darkly shaded bar shows the level of the drive on the right. For the competitive motivation, assume that you are 94% combative and only 6% harmonious. You still have both drives, but how they express themselves varies widely. So, interpreting profiles. In the interpretation of any motive profile, it is both interesting and fruitful to pay attention to the motivational combinations because they are practically relevant to the trading business. To show you what I mean, let me share with you two examples of how to interpret and analyze a motivational profile. Traders A, a Traders A profile shows that they are risk-seeking, combative, and self-confident traders. You can assume that they have mental resilience and are possibly stress resistance. These are clearly useful properties when trading. The flip side of the coin is that you guessed it. Under certain circumstances, trader A is predetermined to make catastrophic miscalculations. Trader A also has a tendency toward overestimating their own powers. They assume that they are in control of a situation when they clearly are not. Negligence or dogmatism. Okay. Warning, I consciously choose this example because I have met some trader with this motivational combination who have fought the markets as done Quixote fought against the windmills. Here is how their stories usually round across an aggressively averaging down, massively expanded loss position, and then negligently ignoring use and risk management, recklessly bloated position size, and finally selling at the lowest point in a panic, or freezing in panic and closing out at a worthless position. Because I don't want this topic to be all doom and gloom, let's take a look at a less drastic case. Trader B. Trader B is a team-oriented person who enjoys meeting people. They are definitely friendly and possibly the life of any party. The opposite personality type would probably be more helpful for trading. The question is whether trader B would truly be satisfied spending the day alone in front of a screen with no human interaction. As you have seen based on both cases, knowing both of the drives within basic motivational structure have fundamental importance. Multiple motives are activated simultaneously. The impact on trading can be significant. It is interesting to note that by nature, humans search for balance in other areas of life if they can't live out certain personality traits or basic motivations in a specific area. For example, a person who loves order and who works in a creative and flexible vocational field will probably live out their need for order at home. This subconscious search for balance and compensation opportunities in other areas is something you can take advantage of in trading. Okay. A risk-seeking combative trader may consciously balance this trade by looking for a competitive spot or an adventurous hobby. This would address their motivational expressions and they would be in a better position in trading if they stuck to the rules there and were more prudent in their trades. So this place is telling us about our weaknesses and strengths because that's what I can sum it down for. Because we find a way to compensate for what we don't have or what we don't have access to. So the here is giving us that suggestion. And a sociable friendly trader could join a group of traders who are similarly inclined, or they will trade for only an hour at a time and spend the rest of the day surrounded by people. So, so both examples are meant to illustrate that you can always look to other areas of your life to create the balance you need. We all need that balance. Finding that balance always makes sense. If not doing so, mean specific characteristics might have undesirable effect on your trading business. However, this strategy has its limits in case of heavy inclination toward one side or the other of the motivational scale. The compensation options may be limited. Self-discipline will suffer. The risk remains. For example, the gambler in you makes an appearance when your emotions are running high. A trader's true character mainly makes an appearance when things get hot. Tip: use your motive profile to create a stress balance sheet, a way to identify trading situations that act as strongly stressors for you. In other words, the motivational influence of your internal drives can work together in a positive manner, leading to synergies, or act negatively, causing tension. Trading is all about character. A certain combination of personality traits and basic motivation is necessary in order to be able to deal with the special requirements and conditions of trading. The motive profile may be able to provide you with clarity and you need in order to see whether trading is for you. Caution, autopilot, staying flexible. That's another subtopic. Rules, systems, and fixed structures in trading are important part of your process orientation. They help you maintain your emotional balance and avoid errors. The flip side of the coin is that routines can affect your change competence. You are walking along a tightrope. Yeah. If you are not careful, your brain switches to autopilot, which is convenient and saves cognitive energy. That is why habits are powerful, because they have proven their worth in an evolutionary development. This default energy saving mode, however, involuntarily leads to the shutdown of other areas of the brain. Your thought processes are in a holding pattern, going round and round, and missing out when the need to adjust to a new situation arises. Many traders can tell you a thing or two about this situation. Always having to be prepared to change and adapt is cognitive quite exhausting. You must be able to respond flexibly because the market environment is constantly changing. Otherwise, you lose your trading edge. Make sure that you always, number one, act differently in volatile markets or strong trends than you would in quiet sideways phases. Recognize that the correlation as well as the relationship of cause and effect evolve during various phases of markets. New trends emerge. Number three, change your strategy and setups depending on whether it is a bull or bear market. For example, when markets are characterized by extreme volatility, the price development range may vary considerably. For example, if you set stops to secure your position too closely, you run the risk that you will regularly get stopped once. We are moving to close to 2 hours today. Wow. So how can you remain mentally flexible and simultaneously avoid habitual self-destructive behavior patterns? Brett Steinberger, the psychologist and trader coach, recommends 4 steps that can help you to react to market requirements in a predictable and careful manner. Number one, look for alternative opinions to your market assessments. Question your basic assumptions regularly. Discuss contrary scenarios with your trader colleagues and search the internet for other points of view. Stay adaptable and gain different perspective. Number two, change your observation period. If you mainly trade in short time frames, it may be worth your time and effort to look at medium and long term trends. A glance at the big picture may provide you with insights that can help you classify price developments in short term arena. In any event, you are sure to gain a different perspective. Number three, consider the entire market. Don't just compare various views and perspectives. The trick is to look at the correlated markets as well. This expands your viewing angle and provides you with valuable information for the market and instrument you use. Number four, keep your distance. Regularly interrupt your trading and take breaks. That step protects you against tunnel vision and helps you maintain an emotional distance from markets. That's because step one to three requires lots of cognitive energy. If you follow these four steps, you will remain adaptable without questioning your process orientation while trading. You will regularly put your market assessment test and identify outdated thinking and behavior patterns. From a bird's eye view, you will learn how to carefully monitor the markets. You will be in a position to detect changes in the markets at an early stage and implement the knowledge gained in your trading plans. This is practical change competence. Remember, you need fixed processes as well as adaptability to changing market conditions in order to succeed as a trader. I guess we've come to the end of chapter three, and tomorrow we'll continue from here. Thank you very much. I believe we've gained one or two. The video is over 2 hours now, so I have to stop. Thank you very much. Have a lovely and a profitable day. God bless us all. Good night.